All right, hello, and welcome to another video. In this video, we're going to be talking about investing in insurance. Did y'all know that you can invest in insurance? Yeah, it's really not just a thing for you to, leave behind your family members when you pass away. You can actually use this to your benefit while you're living. So what we're going to do first is we're going to actually go through two little clips. We're going to get started with two little small clips of a prior um interview that I had with Aaron and Putu about investing in what insurance kind of is. And then we're going to go through a couple of investment options. We're going to visit a few options after that. So, yeah, let's go ahead and get into that first, and then we'll come back.
So let's get into life insurance as a whole. Can you just tell us a little bit about what it is for the person who may not know, and just give us a brief introduction on what that is for us?
Yeah, absolutely. So many of us, especially in the minority community, what we know life insurance is if something happens to me, which is if I die, then my family will receive a lump sum of money. Right now, we're all taught about that, and the reason why we don't like talking about it is because we don't like to talk about dying. To be honest, especially if you're young, like that's the last thing you want to talk about. Is like, hey, you're gonna die, so you should get life insurance.
Right.
I'm good. I'm healthy. I'm okay. So that's what we're taught. But what people don't really know is that there's so many more benefits. Life insurance is not just about you dying; it's actually about your life, right? Your life is an asset, so you're supposed to protect it. So what wealthy people look at life insurance is a completely different way. You look at it, hey, this is a tax shelter. This is somewhere I can grow my money tax-free. This is money that I can be able to use. And this is something of course, in an event, the two guarantees we have in life, we got to pay taxes and we're going to die, right?
That's true. That
is
true.
Be able to leave my family money, something, an inheritance, so they don't have to, struggle like I did, or they want to have a leg up in their life.
Right. That's understandable. Mm-hmm. Okay. So for the person who is scared to go and get life insurance, because like you said just a second ago, people I got all my life to live, like I don't want to think about picking out caskets right now. You know what I mean? So what incentives would you encourage those people who were wanting to look into it but kind of just like I don't really, it's an uncomfortable topic, right. What would you say is something that they could use now?
Absolutely. So this is mainly for younger people, right? Is that what you're talking about?
Yeah. So like a person that's in their 20s, they're not, unless you live a certain type of lifestyle, you're expected to live at least until 60s, 70s expectation, right? So if they're, like you said, in their 20s, they're not thinking about getting life insurance because they're not even, it's an uncomfortable topic. It's something that is widely feared. You know what I mean? Even though people know that it's inevitable, it's still massively feared. So it's like, what would you tell a person who's in their 20s that is like, I really don't think that life insurance is for me because I plan to live this long life, or I just don't want to talk about that right now. Like, Absolutely. How would you smooth that over for them?
Absolutely. So I'm going to give you this quote that somebody gave me, which is really amazing. He said the best time for people to get life insurance is when they don't need it.
Okay.
Right? And why? Why is that? So one, you're young, right? You're healthy. You don't have any sicknesses. You most likely have at least some money that you're able to put away for life insurance, and you're most likely able to qualify for it. So one of the things people don't realize is that the older you get, the more expensive your life insurance is going to be, right? And the worst thing you want to happen is, hey, something happens to you, or you get sick or whatever, then it's just like, man, I should have got life insurance when I was younger because it was a lot cheaper.
Right.
A lot of people's like, hey, you know what? I don't want to have regrets. Literally met people who were like 30, 40 years old. And when I taught them certain things when life insurance, like, man, I should have got this when I was young. I don't look at it, oh, you're going to die, right? It's mainly, okay, what are you going to do during your life? Where's your money going to? Because there's specific types of life insurance that you can get that actually makes you money, right? A lot more interest than just keeping your money in the bank, and a lot more safe than putting your money in the stock market.
All right. Now that's what I'm talking about. That's what I wanted to talk about. How can we use this money to help us make more money?
Absolutely. So I'll give you an example of two very, very well-known companies that would not be here if it wasn't for life insurance. So the first person, you might know him. I don't know if you guys might know him. I don't know. His name is Walt Disney.
Oh man.
Right? So,
are you serious?
Yeah. No, let me tell you the story. So the what happened was the man was flat broke, right? He couldn't get a loan from a bank. He couldn't borrow money. Legit, he had no money. But he had a life insurance policy that was making interest that he actually borrowed money to fund Disneyland.
Oh, Disneyland must have been cheap. Okay.
Hey, this is way back when. I don't know when this man had Disney, but this has been around for the longest, right? But he literally had money in a life insurance policy. He was able to borrow that money to start his business. And how big is Disney today? All of us grew up with Disney. We know only one Disney movie.
I literally just looked up a ticket last night for a child. It's $98.
Hey, you know what I'm saying? They trying to make their money. But it would not be here, all right? It would not be here if it wasn't for life insurance. Here's another company that you might know. There's a guy named Ray Kroc. And he took a business from these two gentlemen who started a burger franchise in California. I believe it's called McDonald's.
Wow.
Right. So So Ray Kroc actually acquired the business, and as he was expanding, he didn't have enough money to pay the employees. So what he did was he borrowed money from his life insurance and then paid his employees. And now McDonald's is all over the world.
That is true.
Right,
selling all types of stuff.
Hey, they making money. I almost got me a McChicken, yesterday. So I was like, hey,
they say the Queen owns a McDonald's.
Hey, that's what it is. So, but that's the thing I teach people. What people don't understand about life insurance is you can put your money in a place where it's making interest and you don't lose money in there, and that you could be able to use it for your business, for schools, for your kids, for whatever you want to use it for, because it's your money. With this specific policy, they call it's a permanent policy. So the way permanent policy works, it lasts your entire life. So with permanent policies, there's two different kinds that I also work with. Well, there's actually total 6 different types of life insurance. I'm going to talk about 2 different ones. So there's a whole life policy, and there's something called an IUL. The way a whole life policy works, it's a policy that lasts your entire life. So the way permanent policies work is every time you make your payment, your premium every month, a portion goes to the cost of life insurance, because it's life insurance, it's not an investment. You're still paying for life insurance. Right. And the other position is you're paying for what they call cash value. Now, cash value in life insurance, that's where your money is actually making interest. Now, with a whole life, they have a fixed interest rate, let's say 4 or 5%, depending on the insurance company that you're with. Okay. So every year your money is making interest. So that's the good thing about with the whole life, is that it's guaranteeing you, hey, no matter what's going on in the stock market, you're still going to make 4%.
So as you can see, just from those snippets there, if you want to look at that whole interview, please, by all means, do so. Go over to the Pennywise channel and go down the live videos, and you'll actually see that. And I'll try to leave the link for that in the description box. But definitely, because he actually dropped a lot of jewels inside of that interview. So definitely go check that out. And as you can see what he was saying, I mean, Walt Disney started out with an insurance policy, borrowed from his insurance policy, created Disneyland. He paid it back, of course, but he borrowed from his policy to start these things. Same thing with McDonald's. McDonald's started from borrowing from a policy. It was money that, he didn't have to go to a bank to get it, because it was in a part of his insurance policy, and he was able to borrow money from that policy and pay it back. And look, like we were stating in that video, McDonald's is all over the world. And it is true. The Queen did own a McDonald's herself. The Queen of England, when she was alive, she did own that McDonald's. So anywho, or that franchise. But anywho, we're going to get into some more ways that we can invest in insurance, because it's not just about off, getting a policy and borrowing from that policy and paying that money back. We also have some other ways that we can invest as well. So here's going to be a few options. So the first option is you can purchase insurance company stocks. Okay, that's for my people who like to be in the market. If you can invest in insurance companies by buying their stocks through a brokerage account. And then you, of course, you want to research different insurance companies and analyze their financial performance. And then, consider different factors like the market share, their growth potential, and then also management quality before you make any type of decision on that. But if you would like to, that is an option, purchasing insurance company stocks. Number two is you can also invest in insurance-focused mutual funds or ETFs. That's another option to invest in the mutual funds or exchange traded funds. Those focus and those particular funds, they focus on the insurance industry. Okay, so these funds are typically hold a diversified portfolio with insurance company stocks, and they're going to provide exposure to the sector as a whole. Okay, so check out the ETFs if you're interested in that. The third type is you can consider insurance-linked securities or ILSs. An ILS, they're official instrument or financial instruments, that is going to allow the investors to participate in insurance risks. Now, these can include the catastrophe bonds, industry loss warranties, and also collateralized reinsurance. Now, ILS provides an opportunity to invest in insurance-related assets and potentially earn returns based on the performance of the underlying risks. So that is also an ILS is something that you might want to be interested in. Now we have a peer-to-peer insurance platforms. Now, some of those platforms allows the individual to invest in insurance policies directly, and then these platforms also connect investors with policy holders. So it's going to allow the investors to fund a portion of the policy in exchange for a share of premiums or potential payouts. So you have the peer-to-peer insurance platforms. Then the last one here that I'm going to mention is that you can invest in insurance technology, like insurtech companies. Insurtech companies are leveraging technology to disrupt the insurance industry. So investing in these companies, they're going to provide you, or they can provide you, should I say, exposure to the innovative solutions and potential growth opportunities within the insurance sector. But like I always say, before you invest in anything, but definitely also insurance to be included, it is definitely important to conduct thorough research. Always assess the risk tolerance. If it's higher risk than you are willing to give out or take, then you may want to reconsider. And always, as usual, always consider consulting with a financial advisor so that you can ensure that your investment aligns with whatever your financial goals or your objectives is. Investing in insurance is just like anything. It's got to be a part of the strategy. You want to get that strategy together. Your financial advisor, based upon whatever your goals are, will be able to help you map out a plan to be able to do so. So I just want you guys to look at some other options outside of just regular stocks and bonds of things that you can invest your money in. And for those who are in a place in their life where they are ready to invest their money and they're looking for some options out there, you might want to consider investing in insurance. You have a couple different ways to do so. These are not the only ways. Even the way that Mr. Aaron also kind of spelled out there, that's not the only way, but that is a way that you can invest in into policies and help build a business. Maybe you have a business already and you're looking for a way to reinvest into that business and make it better. And so there's plenty of options out there for you. That's what this main thing, I'm trying to say is there's plenty of options for you out there. So make sure you're doing due diligence. That's very important. Make sure you also create that strategy. Like I said, that financial advisor is definitely somebody you want to go speak with. And yeah, there's just so much for you to do. So I'm gonna go ahead and get out of here on this note, and I will see you guys on another video. If you did like this information, please hit that like button. Please share this information out, and don't forget to go over to the Pennywise channel. Check that channel out. There's a lot of content there that is definitely going to be valuable to your life. And then also make sure you're subscribed to that channel so you know when I'm going to upload or when I upload. As you can see, as of right now, we're uploading at least 3, sometimes more times a week. Life has been kind of a little busy lately, so it may not be a consistent as far as every day, but make sure you're checking it out every week. And like I said, if you turn those notifications on, you'll know exactly when I am on. But yeah, other than that, I definitely thank you guys for tuning in, and I will see you on the next video.